Alright, so today we're going to take a look at stop loss orders and the less common stop limit loss orders. Um, so for starters, we're going to look at SLV, which is iShares Silver Trust, an exchange traded fund. The reason I'm showing you this is because it's trading right near support and what looks to be pretty strong support. So an investor may look at this and say, hey, I think this is going to bounce off of support and move upward. Um, so I'm going to invest. So let's say that we want to do that. Well, if we wanted to, as the name implies, use a stop loss order to stop from losses, we could do that by placing that order maybe at or near support. So let's just run through that. So let's say that we purchased the ETF today at 26.96. Then it might be a good idea to set a stop loss order at, I would say, 25, maybe 25.50, somewhere in that range. And what this will do is, if we look, we purchase the stock, the ETF here, if this goes against us and hits that $25 level that we placed our stop loss order at, if it hits that level, it will then activate the order and sell our position at the market bid price automatically for us. So it protects us automatically from further losses. The reason, as you could probably see, why we wouldn't want to place that directly at this $26 support level is that, as you can see here, it's done before. It's hit that level, but then it has been able to bounce off of that level. So keep in mind that a stop loss order will automatically sell at that level. So that's why I like to give it a little bit of padding. Also be aware that it's not the perfect safety net, because if this ETF, the markets are currently closed right now. Let's say that next session the market's open and this ETF gaps down. It opens at $24. Well, if our stop loss is at 25, it's just going to automatically sell no matter what, wherever it opens, as long as it's at 25 or below. So we're obviously not guaranteed that $25 price if it gaps down at the open. So be aware of that. Just to show you how to place the order, it's pretty straightforward. I'm showing you here on my Options House virtual platform. Pretty simple. It is just sell, stop, order, and then simply set the stop price, as I mentioned here. Oops. As I mentioned here, we might want to use the $25 level, so therefore, set this to 25. And then, of course, your platform obviously will look different from mine if you don't use Options House, but this is just an example of what it might look like. Now to go over the stop limit loss. This is a less common order. I've actually never used it because I've never been in a situation where I feel like I needed it. But basically, this order takes all the elements of a stop loss order, in that you set the stop price. So again, let's say 25, but then there's a second part of it that is the limit, meaning that the ETF, or the stock, has to be at or above that limit price. So let's say that we set a stop limit loss order and our stop is at 25, but the limit side is at 26. That would mean that if this stock falls, touches the $25 level, it activates the stop order, but it will not sell until it hits 26 or above. So kind of a weird order in my opinion. I'm sure there are some applications, but I tend to use trailing stops, again, that I'll go over in another video, or stop losses. I've seen too many stocks, do these things, where it falls and doesn't come back up. So therefore, in my opinion, a stop limit loss order might not be the best solution, but obviously up to you. And then just to show you real quick, same platform, to use a stop limit loss. Again, you have the stop field that we mentioned. We might do 25, and then the limit field which we could do at 26, or maybe the same. Maybe it might be at 25 as well. That way, if it falls down to 25, we just make sure that it comes back up, or it at least sells there. So anyway, hopefully that explains both stop loss orders and stop limit loss orders.